Welcome and thanks for stopping by. I'm Coach Craig at Digital Micro Trading, and we got a new week in December. So let's look at the calendar. So the first thing on the calendar, profit strategy for year-end trading. Hard to believe, but less than 2 weeks, full weeks that are not holidays left in 2024 trading. So here we are. We just finished Monday the 9th, and we've got two news catalysts, CPI on the 11th, 12th. PPI wholesale numbers and the 18th FOMC. So that's it. I've got circled the 3 catalyst days, and maybe we'll do the day after, day before. I'm just going to watch price action, and that's where we go to the charts. But part of the profit strategy is looking at the calendar and knowing what you're not going to do. And what I'm not going to do is I'm not going to be trading this whole week of Christmas. I'll take a look at where we're at on the 27th and the 30th, but unless there's something real inviting, like a setup that's a AAA plus setup, if I have a AAA setup on the 27th or 30th, I'm going to take it, but it's got to be a real AAA plus setup. So that's it. I'm front loading the whole entire month basically on just the next few days. And that is the plan and the profit strategy for year-end trading. Let's go to the charts. The previous week was who was involved last week. Number one, we had spread traders, calendar spread traders come in every 90 days on futures contracts when contracts roll over. So everybody after today, Monday, on December 9th, should be doing March futures on the equity indices. So that's number one. That effect of why maybe we had no pullbacks, because no meaningful pullbacks happened last week. And what is this week on the calendars? If rollover's done, we've got the big Wednesday inflation report, consumer price index Wednesday, wholesale prices on Thursday. That's the catalyst event. So it's going to be very interesting. We've got a new week open gap at 6166.50 by 6164.50. So 2 handles there on the new week open gap. So that's going to be my marker. We'll go over that on the charts. London opened already at 6172.25. New York midnight for Monday, 6162.50. We've got a 10 handle range. All-time highs hit 5 days in a row last week, and the high on the March futures S&P mini micros is 6179.75. Let's get to the charts. Okay, this is after the close on Monday, so we've got high time frame weekly. Left is the NASDAQ. I don't trade it, but I'm going to watch it and compare it to how strong or weak it is compared to the ES S&P 500. So what you can see is these red lines are the upper Bollinger Band, and what we had is the first black candle in a while, nothing to write home about. You can see the EMA on this blue line on the S&Ps was almost tagged, not so much on the NASDAQ. So again, I'm not going to read too much into this because it was Monday, and we do have the big numbers coming out, as I pointed out, on CPI. So it's real important to look at where the levels are. So fresh powder for me on for Tuesday, Wednesday, and Thursday. So the daily chart right here on the left, NASDAQ. On the right, you can see here, this looks a little bit more robust. So note how the body of the candle on the left on the NASDAQ is inside day of the engulfing candle from Friday, where we had a bearish divergence here on the S&P 500 in comparison because it broke through the body of Friday and it went down. So I like to see this two-way action. So the bottom of the close of this candle here was, if you watched the previous video, I did make a call of where I'd like to see it go in this new week, and we're pretty much hit that and broke a little bit past it on Monday. The more important thing is every day's a new day, and you've still got to be calling it every day. You're only as good as your last trade. So believe me, making a good call on a bullseye is nothing. It's all about consistent base hits to win. What am I thinking here? What I'm thinking is this is relative equal lows, but I've got more relative equal highs that really bothers me. No candle body has really pierced these relative equal highs on the S&Ps. That comes in at 616675, 6166.75. So for shorts or bears to have a meaningful break, a range break, we've got to break this 6133.25. And the low of the day came in at 6.128. So that is right where the zone we talked about on the weekend video. And below here is the middle Bollinger at 6077. So I know some people are calling for a 6088 to a 6077, and it very well could get there, and it could get there quick. But if you look at the daily, there's no relative equal lows until the 80s, 6080s and change. These are the relative equal lows. So I'm going to move my alert here up to around here, and we'll see how it opens on Tuesday. And just remember, we could spike up here on Tuesday just to preempt the CPI. I wouldn't be surprised for Tuesday, but in regards to the CPI number on Wednesday. So I don't want to be all in and use up all my ammo on Tuesday when I've got one of the biggest news catalysts on Wednesday going to happen. 15-minute chart. This is better illustrating what happened here. So this is my go-to time frame. After I've done the daily, I'll look at the hourly because I do want to spot relative equal lows or highs. What we've got here is the silver bullet at 10 with this candle right down here. And then note this 1015 candle. I remember this very well. We just kept precipitously going down on the silver bullet. And here was the low for the AM. So that low comes in at 6133. And then we come back and make a feeble attempt in the afternoon. And this is the open range for the afternoon. So you've got to really go down into a smaller time frame. But this gray box right here, it never really was able to get back up to it, only for the first 30-minute open range for the PM afternoon. This is the S&P 500 3-hour here. And what I like about this is I've got sell-side liquidity on the red line from December 3rd. So you can see this red line here. I'm going to move it right here. And that's 6115.50. And the next one is December 2nd. All these are from last week. Monday, 6103.25 is Monday sell-side liquidity. What do we have below that on the 3-hour? It just keeps going. Daily volume imbalance. And then below that, a daily fair value gap, and below that, major sell-side liquidity at 59.45, 59.20. And I'm not saying we go there here by end of year, but I'm just saying it's got a long way to go to have a significant range break. All we really did was we took out these relative equal lows right here. And when was this? Was last Thursday. And last Thursday was the 5th. And we had a low here of 6145. So we broke the range on that. And again, 6115.5 is the next level. Now, could we go back up before CPI and then go back to all-time new highs? It could happen. So back to the daily, just recapping last Friday, red line here, all-time high. This was last Friday's all-time high. We hit in the morning, 6179.75. And here's this big Monday range break. So we broke out of the Friday, the Thursday, and we reclaimed a good chunk. But the body of the candle here did not go past Wednesday. So Wednesday, it stopped short. Only the candle wick went below. The low of the day again is right down here with this red line. Here's Tuesday. We just opened extended hours right here. You can see I've got some numbers down there for new week open gap and the settlement, which was 6128.75 on the dot for Monday. And then new day open gap in dog 61350 by 613025, more or less. So that's where we're at for Tuesday open. What we've got is some air between price body and this 3 EMA on the daily. It's coming in at 6138, and you already have been given the level of that break. What was the break? The break was 6145, and we got some bearish divergence. And again, when I started this video, I talked about the narrative, in my opinion, was we had an extra dimension of spread traders for futures rollover messing things up. And they always do that every 90 days, and they come in and get up for a lot of traders. And that's why it was suspended animation. So really what is going to tell the story is the next 48 hours before CPI and then Wednesday CPI. And so we've got a lot of ground to cover here for the bears. Once again, the sell side liquidity buyers, the triple daily volume imbalances, and then way down here, daily fair value gap. There's so much distance. And then ultimately this sell side red liquidity level. So those are the levels. That's the perspective. I'm going to sign off here. I appreciate you guys watching and looking at the chart action. Remember, just a few more days. You need to think about the day of the week, the day of the month. We're going into the holidays, and the time of the day. Most important, is it before the catalyst? Is it at the catalyst? What is the minute and the hour? Because it's time before price. So that's all I've got for this portion of the beginning of the week here. And we're going to see how Tuesday the 10th treats us. And then it's all about December 11th. That is the big catalyst, pretty much until we get to FOMC, which will be on the 18th. Take care and aloha. Bye.